Hello, I'm Annabel Brodie-Smith, Communications Director of the Association of Investment Companies. Investment companies now manage 23 billion of UK property assets, compared to just 7 billion in open-ended funds, making them the dominant vehicle for private investors to gain diversified exposure to property. With 14 property investment companies in the Property UK commercial sector, and a further 3 in the Property UK logistics sector to choose from, and most of them trading on double-digit discounts right now. What is the outlook for UK property investment company managers? Today, I'm very pleased to be joined by Richard Shepherd-Cross, who's the Managing Director of Custodian Capital and Fund Manager of Custodian Property Income REIT, and Bjorn Hobart, Investment Director of Tritax Big Box REIT. Right, on to the questions. So, Richard, how is your property portfolio faring in the current challenging economic conditions?
I'm going to say surprisingly well, because sentiment to property investment is so down at the moment. I think people would be surprised to know that it's faring well. And if we look, over the year to date, valuations are down, or net asset value is down in Custodian Property Income REIT by 4.5%. But that's being driven by investor sentiment. Because if we look at the nuts and bolts of real estate, our rent roll is up 2.2%, and our estimated rental value is up 2.9% over the same period. Now, those numbers shouldn't be going in opposite directions. They should be aligned. So I think there's a big disconnect. And I think people are still negative to real estate because they got their fingers burnt in 2022. 2023, it's not without its challenges. No market ever is. But the vibe on the ground is that occupiers are taking space, rents are growing, vacancy rates are falling. All of these things should be good for property investment. And indeed, they are good for property investment. We just need sentiment to fall into line.
Well, that actually sounds really encouraging. Bjorn, is that your experience at the moment?
It is. I'm glad to say we sort of, agree with Richard. I mean, the economic outlook is challenging. Inflation is proving stubborn. Higher interest rates, are likely to have a sort of further impact on the economy. But we're really proud of our portfolio that was being individually curated to be highly resilient through uncertain economic conditions, and especially these. We have modern, well-located buildings let to financially robust occupiers that can continue to pay the rent against their mission-critical buildings where they've taken long leases, and ultimately this underpins the income receipt and therefore the distributions that we can provide our shareholders. There is that resilient demand. There has been an uptick in availability, but it's still modest against long-term metrics. And it's this moderated supply against this strong occupational demand because of all of the structural drivers for occupiers wanting modern, fit-for-purpose logistics properties where they can operate efficiently out of.
Okay, well, that's really good that there is this resilience for these properties. And when we talked about the economic conditions, now it feels like we're near the top for interest rates. Of course, we've all had the higher for longer drummed into us. But what are your thoughts on this? And surely that could make a difference for UK property. I'm going to ask that to Bjorn.
Yes, I think it will make a difference. Obviously, as we saw last week with the Bank of England's decision to keep interest rates stable, then the suggestion is that stubborn inflation is being brought under control. there's a direct correlation between interest rates, cost of borrowing on property company net asset values. So I think the longer they remain stable, the indicators which suggest that inflation is coming under control will all feed into a positive reflection for property companies, which actually we saw very quickly through share price movement after that Bank of decision last week. So I think probably in the next 12 to 24 months, we may see some decrease in those interest rates, but not for the near term, I have to say. But stabilization is key.
Richard, what's your view here on rates and the impact where we are in the economy?
Funny thing, isn't it? We've got we have got a rather upside down view of the world, having had low rates for so long, and with many of us, probably anyone who's got a mortgage, clamoring for interest rates to return to close to zero. But that's a sign of a sick economy. We should be able to support interest rates in the economy at current levels. And real estate has been an investable asset for many, many years, not just in the last 10 years with zero interest rates. But the type of property that you own, if you are funding your business with debt, needs to reflect the cost of debt. And happily, Custodian Property Income REIT has always pursued a strongly income-focused strategy, buying smaller regional properties to drive those higher marginal returns. And we are confident, particularly with the rental growth in the sector, that as our fixed rate debt runs off over time, and it runs out till 2032, so perhaps it's easy to make that prediction with such a long term on some of our fixed rate debt, the portfolio will support the increased cost of debt. And it wasn't such a long time ago in our working lives when we were pleased with interest rates of 5%, and real estate operated perfectly well in that environment. So we just need to make sure we've got the portfolios that fit the interest rate environment we're in. And I think we should reasonably expect that they're going to be north of 4% for some time.
Yeah, I think you're right. I think we've been spoiled by this low interest rate environment. And in reality, rates have normalized now. 5% is not particularly high.
No, that's the truth.
Yeah. So I'd like to ask you, what's the view on the discounts on your trust? The sector average for the UK commercial property and UK logistics is around 26%. What's your view on this discount? Is it a buying opportunity? Richard?
I think the first thing to say about headlining a question with discount is that we're focusing on the wrong measure of worth. Net asset value is an interesting number. It's what the portfolio could have sold for, property by property, 3 months ago. But in terms of worth, we should be looking at earnings, and we should be headlining these questions with what do we think about the future of earnings and the prospects of earnings growth. And an earnings denominated measure of worth, I think, is much more valid for real estate investment trusts. So I suppose but to try and answer your question, the way we should look at it is, what is the current pricing, discount or otherwise, doing to the earnings yield, or the PE multiple if you prefer the inverse, but I prefer the earnings yield because I think it makes sense to all investors. What's it doing to the earnings yield of companies? And the answer is, but for a lot of us, it's showing earnings yields of 6-7%, which are fully covering dividends, and dividend yields of 6-7% look pretty attractive as an entry point for investment, given that the best way for an investment to perform is for you to buy it at the right price. As an entry point, with fully covered dividends of 6 or 7%, feels like a pretty good backstop in an environment where underlying rents are growing and occupation is strong.
I would agree with you. 6-7% sounds very attractive to me. Bjorn, what's your view on this? Are these discounts opportunity?
Yes, absolutely. I would wholly agree with Richard. You know, it's really key to look at that underlying income stream where it has the ability to grow and capture the prevailing market rent, what the credit strength of that income stream is backed off against. But at the same point, it's a fantastic opportunity, buying opportunity into these discounted levels where you're getting that high income return, as Richard said, against some really well-managed, strong balance sheet companies that have got the ability to add further value over time with their embedded skill set of asset management, value preservation, repurposing buildings fit for modern occupation.
Yeah, obviously we can never time the market. We don't know when exactly the right time to invest in, but it does seem a particularly good time to invest in property at the moment with it being so out of favour. But as we've discussed, you know, attractive yields, a lot of benefits there. And my next question is, how is your portfolio of properties having a positive environmental or social impact? And Bjorn, how's that the case?
Well, we're twofold. We're working very hard to ensure that our incumbent portfolio meets the future minimum requirement for energy performance certificates, and there's minimal capex required to bring any which are below the minimal threshold of an EPC B up to standard. It's in the orbit of 2.5 million. Albeit I should remind everyone that actually 99% of our portfolio does have a EPC certificate between A and B. The second point is we're developing brand new modern logistics real estate for our customers and customers that we don't yet have, and attracting them into buildings to achieve the best rent with minimal void periods. They need to have fit for purpose fundamentals, property fundamentals, and that is in the form of energy generation, which can be delivered through photovoltaic panels on the roof. We're also providing environments which have biodiversity and well-being centres for the occupiers. Now, they also are dictating what they wish to include within their buildings, and these larger format buildings can accommodate gyms and canteens and child care centres to ensure that the environment is a nice place to work. And we're sort of distancing ourselves from the older characteristics and understanding of industrial and logistics, which sounds dirty and archaic, where these buildings are modern, in landscaped environments with a multitude of facilities. So the environmental and social elements are core to our strategy.
Well, quite honestly, I wish I was working at one of these buildings with a wellness centre and a gym and landscaped and biodiverse. It sounds amazing. Richard, how about you? What are the environmental and social benefits?
I think the first thing to say about it's often referred to as the ESG agenda. It has just become embedded. It's just the way you manage real estate, and you manage it because there is a strong financial imperative that suggests if you don't, you're not going to attract the best tenants, you're not going to get the best rents, you're going to you'll see your buildings falling behind. I mean, I think taking a slightly different take to Bjorn, I think that the way we measure environmental impact at the moment is looking at a very sort of fixed point in time. So if you create a brand new building and it's got a very low environmental performance certificate and it's BREEAM excellent or superb or whatever other superlative BREEAM come up with to describe their buildings, that's all well and good, but does it leave other buildings behind? And I think the way we look at environmental performance needs to change. And we should be giving credit to those landlords who are repurposing existing buildings and retaining all that embodied carbon that's in those buildings and making the best use of those buildings. They're very often, and this is sort of quite different to Bjorn's portfolio, in city centres, which, you know, there's a huge social benefit in bringing people into the city centre, either to live or to work or to shop. So I think that as an industry, we need to take a more grown-up look at environmental issues and make sure that people are properly rewarded. And that means that, you know, shareholders need to come on this journey too, because if shareholders don't reward fund managers for doing it, then the fund managers aren't going to do it. And it's not a huge part of what we do, but I think we need to try and encourage positive behaviour with the appropriate legislation and the appropriate metrics to measure environmental and social impact.
Do you know what? I think you're so right, Richard, because I'm here in the City of London. We're surrounded by properties, and I cannot believe how often they are just literally knocked completely down and they start again. And that seems to be a very regular cycle, quite honestly.
Yeah.
And actually developing them and making them fit for purpose, but, you know, doing that was obviously much more environmentally sound.
Yeah.
Good. So there's an election next year. How could we forget? Now, would Labour winning make any difference to UK property companies? And I'm going to kick off with Richard on this one.
So I think the question you're asking is that would a left of centre government have a significant impact on our currently left of centre Conservative Party? I think the answer is no, not a lot of difference. And probably even if it is going to be a great deal of difference, despite being a fully paid up member of one of the two parties, you can guess which one that might be. I think we probably need to accept that we are going to have a change of government.
Very good answer. I like it. Not too committed, but I think you're right. There's very little difference between the parties. Bjorn, what do you think?
It's hard to say because they might voice their strategy and direction of travel, but as we've recently seen, that may well be reversed as and when they take to power. It's probably highly likely that we'll see a change in government. I would hope that there'll be some focus on improving the planning system, which is incredibly challenging at this point in time. There's not enough resource. Decisions are incredibly slow. It's actually grinding to a halt and preventing a very valuable part of the economy to progress in an efficient manner. So there are some things that I would like to see. Whether they will happen with a change of government, I'm not too sure.
Excellent. It's interesting you mentioned the planning system because that obviously has been very high profile for the Labour Party. Of course, we don't take political views here at the AIC, and we will wait to see what happens next year. I'd like to thank our managers very much for joining us today. It's been great to hear their views on the prospects for UK property investment companies. I'd like to emphasise that we don't know what's going to happen in the future. Investment is for the long term, and it's important to have a well-balanced portfolio. If you're in any doubt, you should talk to a financial advisor. Thanks so much for watching.